Question 1. Through the lens of commercial property insurance principles, consider the following. Is Linde owns a manufacturing plant in Tulsa insured under a building and personal property BPP form with a special causes of loss form? During a power outage, a refrigeration units fail, causing spoilage of valuable raw materials. She files a claim expecting compensation. However, the insurer denies coverage. Which of the following best explains the insurer's decision to deny the claim? A. Spoilage is not covered under any commercial property form. B. Power failure from external sources is excluded unless endorsed. C. The special causes of loss form automatically covers spoilage. D. Business income coverage would apply. No. E. Answer. Correct answer. B. Power failure from external sources is excluded unless endorsed. Explanation. Under the special causes of loss form, power failure originating away from the insured premises is excluded unless specifically endorsed. The spoilage endorsement must be added to a E form to cover perishables, NATE model property forms, and ASO CP 1030 emphasize this exclusion. Even though it's special form coverage, it does not include utility failure-related spoilage unless the spoilage coverage endorsement CP 440 is attached. Thus, the insurer's denial is justified. Question 2. In light of recent developments in cybercrime, Ista Patel, owner of a regional CPA firm, suffers a data breach where clients' social security numbers are compromised. His standard business owner's policy BOP is in place. He files claim expecting reimbursement for notification costs and identity theft mitigation services. What is the most likely outcome of his claim under the standard BOP? A. Covered in full under the business personal property section. B. Denied unless cyber liability endorsement or separate policy was purchased. C. Covered if the cause was internal employee negligence. D. Partially covered under supplementary payments. Answer. Correct answer. B. Denied unless a cyber liability endorsement or separate policy was purchased. Explanation. Standard BOPs exclude cyber-related incidents such as data breaches unless the policy includes an optional cyber liability endorsement as a BP 997 or similar. Without this, notification costs and identity theft services are outside the policy scope. Oklahoma does not mandate cyber coverage in BOPs. NAIC and Oklahoma Insurance Department guidelines stress the importance of cyber-specific coverage for handling such liabilities. Question 3. When evaluating the merits of an insurable interest, consider Ista James applies for a commercial property policy on a warehouse he manages but does not own, lease, or derive financial benefit from. Which of the following best explains why the insurer would decline to issue the policy? A. He failed to demonstrate utmost good faith. B. Insurable interest must exist at policy inception only. C. Insurable interest requires a financial or legal relationship to the property. D. Only the owner may insure commercial property. Answer. Correct answer. C. Insurable interest requires a financial or legal relationship to the property. Explanation. To have an insurable interest, the insured must suffer financial loss if the property is damaged. Since Ista James does not own, lease, or benefit financially, he lacks this interest, violating Oklahoma Title 36 SS 3605. Insurable interest must exist at the time of loss. This principle prevents moral hazard. Ensures lawful indemnification. Question 4. Demonstrated by the case of Ista Richardson, who owns a plumbing company in Norman. He purchases a commercial general liability CGL policy that after completing work on a bathroom remodel, a pipe bursts weeks later, causing water damage. The client sues for defective workmanship and damage to their property. With CGL coverage applies if any. A. Coverage. A. Property damage from completed operations. B. Coverage. B. Advertising injury. C. Coverage. C. Medical payments. D. No coverage applies due to workmanship exclusion. Answer. Correct answer. A. Coverage. A. Property damage from completed operations. Explanation. CGL coverage includes liability for bodily injury or property damage caused by completed operations if the damage occurs after the work is completed, while faulty workmanship itself is not covered. Resultant property damage, e.g. water damage to the client's home, is covered. ICG Euro 1 and Oklahoma's commercial insurance rules affirm this coverage under the product's completed operations hazard. Question 5. In terms of Oklahoma-specific regulatory requirements, what is the minimum advance written notice an insurer must provide to a commercial policyholder before cancellation for non-payment of premium? A. 15 days, B. 30 days, C. 10 days, D. 20 days. Answer. Correct answer, C. 10 days. Explanation: per Oklahoma Administrative Code OC SS 36 15.1.14 and Title 36 SS 3639, commercial insurance policies must provide at least 10 days written notice prior to cancellation for non-payment of premium. Other cancellations require 45 days notice. This regulation protects policyholders from abrupt coverage termination and ensures compliance with Oklahoma insurance law. Question 6. By evaluating a risk management scenario, supposes Garcia owns a small bakery in Oklahoma City. She has a bot that includes business income coverage. A fire damages the kitchen and she is forced to close for 3 weeks. She also incurs additional costs to lease the temporary kitchen. How does her policy respond to these losses? A. It covers only the loss of income. B. Covers both income loss and extra expense if endorsed. C. Covers income loss and extra expense automatically. D. Covers income loss but not expenses for relocation. Answer. Correct answer, C. Covers income loss and extra expense automatically. Explanation: standard ISO-BOP forms BP03 include both business income and extra expense coverages. There's no need for an endorsement. This ensures continuity of operations during the period of restoration. Oklahoma regulations follow NAIC model policy structures, making this coverage standard for small business insureds under BOP. Question 7. Under the assumption that a business operates a fleet of delivery trucks, which of the following covered auto symbols provides the broadest liability coverage under a business auto policy? BAP. A. Symbol 9. Non-owned autos. B. Symbol 7. Specifically described autos. C. Symbol 1. Any auto. D. Symbol 2. Or owned autos only. Answer. Correct answer, C. Symbol 1. Any auto. Explanation: Symbol 1 provides the broadest form of coverage, applying to any auto whether owned, hired, borrowed, or newly acquired. For liability coverage, it's critical for businesses with diverse vehicle use. ISO 01 policy forms define this in the declarations. Oklahoma adopts standard ISO form structure, and agents are expected to explain the implications of each symbol when tailoring back coverage. Question 8. Based on the information presented in a commercial umbrella policy, which of the following is typically true about how umbrella insurance responds to losses? A. It replaces the primary policy once exhausted. B. It covers only what the primary policy excludes. C. It never applies to self-insured retentions. D. It provides excess coverage and may drop down in some cases. Answer. Correct answer, D. It provides excess coverage and may drop down in some cases. Explanation: umbrella policies provide excess coverage above primary policies. They also include drop-down provisions when no underlying coverage applies, but the loss is not excluded. This can occur when underlying policies are exhausted or non-existent. Oklahoma recognizes standard ISO 201 umbrella policy structures. Understanding when and how the umbrella drops down is critical in commercial risk management. Question 9. Considering the evidence in a Fidelity Bond claim, Isingo suspects her employee of embezzling $50,000 over 12 months. She files a claim under her commercial crime policy. The insurer requests proof. Which of the following must she provide to support her claim? A. Proof of loss via police report only. B. Audited financials showing declining profits. C. Legal conviction of the employee. D. Evidence of dishonest act directly resulting in financial loss. Answer. Correct answer, D. Evidence of dishonest act directly resulting in financial loss. Explanation: to trigger Fidelity Bond crime insurance coverage, the insured must prove the employee's dishonest act caused direct financial loss. Criminal conviction is not required. ISO Commercial Crime Coverage Form CIO 21 and Oklahoma Title 36 SS 3621 specify that documentation such as financial records, affidavits, and proof of loss must be presented, demonstrating direct causal link between the employee's act and the loss. Question 10. Given the circumstances surrounding a claim under the Oklahoma Workers' Compensation Act, Mr. Thompson suffers a work-related injury but delays notifying his employer for 6 weeks. He applies for benefits. Which of the following best describes the impact of his delay on his claim? A. His claim is automatically denied due to late notification. B. The claim may still be valid if the employer was not prejudiced by the delay. C. Workers' compensation claims do not require employee notification. D. Benefits are reduced proportionally based on the delay period. Answer. Correct answer. B. The claim may still be valid if the employer was not prejudiced by the delay. Explanation. Oklahoma law requires employees to notify their employer as soon as practicable after injury. Okla. Stat. Title 85 SS 43. Late notification can complicate claims but does not automatically deny benefits unless it causes prejudice or hinders investigation. Courts weigh whether the employer was harmed by the delay. This balances prompt claims with fairness to injured workers. Question 11. In the modern context of commercial auto insurance, Isis Lopez owns a trucking company with a business auto policy BAP covering owned autos only. Symbol 2. One of her drivers borrows a personal vehicle for deliveries and causes a collision. What is the likely coverage outcome? A. Covered because driver was on company business. B. Not covered because symbol 2 excludes non-owned autos. C. Covered if driver is listed as a named insured. D. Covered under uninsured motorist coverage. Answer. Correct answer. B. Not covered because symbol 2 excludes non-owned autos. Explanation. Symbol 2 limits coverage to vehicles owned by the insured. Borrowed or personal vehicles are non-owned and excluded unless symbol 9 or broader symbols are in effect. Oklahoma follows ISO business auto forms, therefore liability from the borrowed vehicle would typically be excluded, placing risk on the driver or personal auto policy. Question 12. When considering the principle of indemnity in commercial insurance, Mr. Brown's warehouse suffers fire damage. He files claim under his policy with replacement cost value, RCV, coverage but opts for actual cash value, SEV, settlement. What is the conceptual difference between RCV and CV, and why might Mr. Brown choose RCV? A. RCV accounts for depreciation. AV pays full replacement cost. B. CV deducts depreciation. C is to replace without depreciation. C. RCV pays market value. AV pays policy limits. D. CV is more expensive than RE. Answer. Correct answer. B. CV deducts depreciation. C is to replace without depreciation. Explanation. Indemnity principle aims to restore the insured to pre-loss financial position. SEV equals replacement cost. Depreciation RCV pays the full replacement without depreciation, usually requiring repairs or replacement. Some insureds accept RCV for low premiums or when immediate funds are needed. Oklahoma policy forms as OCP 010 outline these valuation methods. Question 13. Considering the evidence in a commercial general liability CGL claim Mr. Sanchez owns a restaurant and is sued after a patron slips on a wet floor. His policy includes coverage with a $1 million per occurrence limit and $2 million aggregate. If two patrons are injured in separate incidents within the policy year, how do the limits apply? A. Each claim is covered up to $1 million with no aggregate limit. B. $1 million total for both incidents combined. C. Each claim covered up to $1 million, but total payments cannot exceed $2 million aggregate. D. Coverage is unlimited as long as each incident is separate. Answer. Correct answer. C. Each claim covered up to $1 million, but total payments cannot exceed $2 million aggregate. Explanation. The per occurrence limit applies per incident. The aggregate is the total limit for all claims within the policy period. Once the aggregate is exhausted, no further payments are made. Oklahoma's adoption of AUSA CG 01 standard forms reflects this limit structure. Question 14. Under the assumption that a commercial insured faces a claim dispute regarding policy concealment, Mr. Evans is accused of failing to disclose a prior fire loss on his application. Which of the following is the insurer's best course of action according to utmost good faith doctrine? A. Automatically deny the claim due to concealment. B. Investigate if the omission was intentional and material. C. Pay the claim but increase premiums retroactively. D. Cancel the policy immediately without investigation. Answer. Correct answer. B. Investigate if the omission was intentional and material. Explanation. Utmost good faith requires honest disclosure by both parties. Concealment must be intentional and material to justify denial or rescission. Oklahoma Title 36 SS 3606. Insurers must investigate facts before denying claims. Blanket denials violate the duty of good faith and may expose insurers to bad. Question 15. Taking into account the principles of reinsurance, a regional insurer in Oklahoma faces catastrophic losses after a tornado. They have a proportional reinsurance agreement with a reinsurer. How does proportional reinsurance work in this scenario? A. The reinsurer covers losses exceeding a set threshold. B. The reinsurer shares premiums and losses proportionally. C. The insurer cedes premiums but retains all claims responsibility. D. The reinsurer only pays after insurer insolvency. Answer. Correct answer. B. The reinsurer shares premiums and losses proportionally. Explanation. Proportional reinsurance, quota share or surplus share, involves sharing both premiums and losses between insurer and reinsurer according to agreed percentages. This helps insurers stabilize loss experience. Non-proportional reinsurance differs by covering losses above a retention. Oklahoma insurance law encourages reinsurance for risk management. Question 16. The primary reason for the Oklahoma Insurance Guarantee Association is to A. Guarantee claims payment if insurers become insolvent. B. Provide policy coverage for uninsured motorists. C. Underwrite high-risk commercial properties. D. Regulate premium rates for commercial lines. Answer. Correct answer. A. Guarantee claims payment if insurers become insolvent. Explanation. The Oklahoma Insurance Guarantee Association (OIGA) protects policyholders by paying covered claims when insurers become insolvent. Oklahoma Stat. Title 36 SS 1201. It does not provide new coverage or regulate premiums. This safety net promotes market stability and consumer protection. Question 17. In response to an agent's ethical dilemma, Mr. Wilson discovers his client misrepresented inventory values to low premiums. The agent must decide what to do. What is the agent's fiduciary duty in this situation? A. Ignore misrepresentation if no claim filed yet. B. Report the misrepresentation to the insurer immediately. C. Alter the application to correct values without client consent. D. Advise the client to continue misrepresenting to save costs. Answer. Correct answer. B. Report the misrepresentation to the insurer immediately. Explanation. Agents owe a fiduciary duty to both insurer and insured to act with honesty and fairness. Concealment or misrepresentation invalidates coverage and may expose all parties to legal liability. Oklahoma's insurance ethics rules and NAIC model laws require agents to report material misstatements to insurers promptly. Question 18. When analyzing vacancy causes in commercial property policies, Mrs. Evans' office building was unoccupied for 90 days during renovations. Vandalism loss occurred. Which of the following best describes the insurer's position on this claim? A. Loss is fully covered despite vacancy. B. Loss is excluded due to vacancy exceeding policy limits. C. Partial coverage applies if the vacancy was unintentional. D. Vacancy does not affect vandalism coverage. Answer. Correct answer. B. Loss is excluded due to vacancy exceeding policy limits. Explanation. Most commercial property policies exclude or limit coverage for losses caused by vandalism or sprinkler leakage if the building has been vacant for more than 60 days as OCP 1030. Vacancy means no people or business activity. Oklahoma policies incorporate these vacancy conditions, making losses during long vacancy periods typically excluded. Question 19. From a practical standpoint, how does the coinsurance clause promote adequate insurance? A. By requiring full coverage of property value at all times. B. By penalizing insureds who underinsure at the time of loss. C. By increasing premiums when losses occur. D. By waiving deductibles for insureds with high coverage. Answer. Correct answer. B. By penalizing insureds who underinsure at the time of loss. Explanation. The coinsurance clause encourages policyholders to insure their property to a stated percentage of its value, often 80%. If insured amount falls short, the insurer reduces claim payments proportionally. This incentivizes maintaining adequate coverage and fairness in loss distribution. It is a cornerstone in commercial property policies per ISO 4, an Oklahoma law. Question 20. Taking into account the duties of producers in Oklahoma, Mr. Edwards, an insurance agent, discovers a potential conflict of interest when recommending a commercial umbrella policy to his client. He is tempted to prioritize his commission over the client's actual needs. What is the ethical obligation of Mr. Edwards in this situation? A. Recommend the policy that maximizes his commission regardless of client needs. B. Disclose the conflict of interest and prioritize the client's best interest. C. Avoid discussing commission to prevent alarming the client. D. Refer the client to another agent without explanation. Answer. Correct answer. B. Disclose the conflict of interest and prioritize the client's best interest. Explanation. Oklahoma law and NATE producer regulations impose fiduciary duties on agents to act honestly and in good faith, prioritizing client interests. Failure to disclose conflicts of interest violates the Oklahoma Insurance Department's ethical guidelines and can lead to penalties. Transparency builds trust and upholds integrity. Question 21. Considering the evidence Mr. Jenkins runs, a trucking company with a motor carrier coverage policy his insurer denies a liability claim from a cargo spill, stating that the spilled cargo was hazardous material not listed on the policy. What is the insurer's correct position under standard motor carrier coverage? A. The insurer must pay regardless of cargo type. B. The insurer is not liable for hazardous materials unless specifically endorsed. C. The policy covers all cargo automatically. D. The claim is valid only if the hazardous material was declared after the accident. Answer. Correct answer. B. The insurer is not liable for hazardous materials unless specifically endorsed. Explanation. Motor carrier coverage typically excludes hazardous materials unless the policy includes a specific endorsement or filing as required by the federal motor carrier safety regulations and Oklahoma statutes. This exclusion manages risk exposure, and insureds must notify and insure hazardous cargo separately. Question 22. From the perspective of Oklahoma's Unfair Claims Settlement Practices Act, Mr. Carter's insurer delayed claim payment for 90 days without valid reason. Which of the following best describes the insurer's potential violation? A. The insurer acted within its right to investigate thoroughly. B. The insurer may be in violation for failing to settle promptly and fairly. C. The insurer is only liable if the delay exceeds 180 days. D. Delay is permitted if the policyholder did not provide notice. Answer. Correct answer. B. The insurer may be in violation for failing to settle promptly and fairly. Explanation. Oklahoma law, Okla Stat, Title 36 SS 1258 Sec. requires insurers to act promptly and fairly. Unreasonable delay or denial without proper cause constitutes an unfair claims practice and can trigger penalties. This protects consumers and ensures timely indemnification. Question 23. Under the framework of the Oklahoma Workers' Compensation Act, Ms. Taylor's employer contests her claim by alleging she was intoxicated at work during injury. What effect does this have on her entitlement to benefits? A. Benefits are automatically denied regardless of intoxication level. B. Benefits may be reduced or denied if intoxication contributed substantially to the injury. C. The claim is accepted but benefits reduced by 50%. D. Intoxication is irrelevant in determining benefits. Answer. Correct answer. B. Benefits may be reduced or denied if intoxication contributed substantially to the injury. Explanation. Per Okla Stat. Title 85 SS 14, benefits can be denied or reduced if the employee's intoxication substantially caused or contributed to the injury. This aligns with the principle of workplace safety and accountability, but requires clear evidence. Question 24. In the process of underwriting a commercial package policy (CPP), the underwriter discovers inconsistent information about the business's operations. What principle should guide the underwriter's decision? A. Ignore inconsistencies if premiums are paid on time. B. Require full disclosure and verify representations before issuing the policy. C. Automatically deny the application due to any inconsistency. D. Issue the policy with exclusions for unverified operations. Answer. Correct answer. B. Require full disclosure and verify representations before issuing the policy. Explanation. The principle of utmost good faith requires the applicant to disclose material facts accurately. Underwriters rely on this information to evaluate risk. Misrepresentation or concealment can void coverage. Oklahoma insurance laws support thorough underwriting for fair risk assessment. Question 25. Is illustrated by a recent claim involving commercial equipment breakdown. A factory owner, Mr. Simmons, files a claim for lost income during equipment repairs. Which coverage best addresses his financial loss? A. Equipment breakdown policies business income coverage. B. Standard commercial property forms building coverage. C. Commercial general liability policy. D. Inland marine coverage for property in transit. Answer. Correct answer. A. Equipment breakdown policies business income coverage. Explanation. Equipment breakdown insurance includes coverage for physical loss to machinery and consequential business income losses due to the breakdown. This coverage fills gaps left by traditional property forms. Oklahoma insurers typically follow ISO equipment breakdown forms reflecting this. Question 26. From a practical standpoint, Mr. Lee operates a small retail business with a business owner's policy, but he adds a crime insurance endorsement to protect against employee dishonesty. What coverage does this endorsement typically provide? A. Liability for employee negligence causing client injury. B. Protection against theft, forgery, and embezzlement by employees. C. Coverage for property damage caused by employees. D. Health insurance for employees. Answer. Correct answer. B. Protection against theft, forgery, and embezzlement by employees. Explanation. Crime insurance specifically covers losses from dishonest acts by employees or third parties, including theft, forgery, and embezzlement. It does not cover negligence or property damage unrelated to criminal acts. Oklahoma policies follow standard ISO crime forms. Question 27. When evaluating liability under the Oklahoma Commercial General Liability Policy, is Johnson's company is sued for libel after negative online review about competitor was posted? Which coverage applies under the CGL policy? A. Coverage. Bodily injury and property damage. B. Coverage B. Personal and advertising injury. C. Coverage C. Medical payments. D. No coverage because libel is excluded. Answer. Correct answer. B. Coverage B. Personal and advertising injury. Explanation. Coverage B protects against personal and advertising injuries including libel, slander, and defamation as outlined in CG01 forms and Oklahoma CGL standards. This coverage provides defense and indemnity for such claims. Question 20. From the perspective of policy cancellation regulations in Oklahoma, an insurer intends to non-renew a commercial policy due to poor claims history. What is the minimum notice the insurer must provide to the insured? A. 10 days prior notice. B. 30 days prior notice. C. 45 days prior notice. D. No notice required for non-renewal. Answer. Correct answer. C. 45 days prior notice. Explanation. Oklahoma law, OCLA, Stat. Title 36 SS 3639 requires insurers to provide at least 45 days notice for non-renewal of commercial policies, ensuring insureds have time to seek alternative coverage. Question 29. When faced with the question of subrogation rights, is the Davis insurer paid claim after his business property was damaged by third parties' negligence? What rights does the insurer have regarding recovery? A. No right to recover once claim is paid. B. The insurer may pursue the negligent third party to recover the claim amount. C. The insured must waive all recovery rights to the insurer. D. Subrogation applies only to bodily injury claims. Answer. Correct answer. B. The insurer may pursue the negligent third party to recover the claim amount. Explanation. Subrogation allows the insurer to assume the insured's rights to recover from responsible third parties. Preventing double recovery is fundamental principle supported by Oklahoma law and commercial policy language to reduce insurer losses and maintain fairness. Question 30. Financial institution discovers that one of its correspondent banking clients is conducting high volumes of US dollar transactions with shell companies registered in high-risk jurisdictions. The institution's AML officer decides to reassess the risk and take appropriate action. What should be the officer's first step in addressing the risk? A. File suspicious activity report, SAR, with the relevant authorities immediately. B. Terminate the relationship with the correspondent bank without further investigation. C. Conduct enhanced due diligence and request additional information from the correspondent bank. D. Notify the board of directors and await further instruction. Answer. Correct answer. C. Conduct enhanced due diligence and request additional information from the correspondent bank. Explanation. The first step should be to conduct enhanced due diligence to better understand the nature of the transactions and the correspondent bank's controls. This includes obtaining information about the shell company's ownership structures and purpose of the transactions. Termination or reporting without adequate information could be premature.